So we've talked a lot about investing, but we haven't really told you what our investment criteria is. The sentence on the top really summarizes that very well. We want apartment buildings with great design, family friendly amenities that are really building a sense of community. It's all about elevating the community around the building. There are always a property manager with experience on site, so called boots on the ground, as we like to call it, that like to welcome the tenants that live there and the folks that are really enjoying the amenities that we will go ahead and improve as what we call value add. So, as an example, we listed here that generally we're investing in properties that are between 80 to 300 units. We're looking at emerging markets. We're listing Texas, Georgia, and Florida, but that's an ever changing landscape in this country. So, we may bring you deals from other places as well. Most importantly, when we bring you the apartment building, we're looking to value add. What does that mean? It means simple things: creating a pet park, creating a new park for the children, valet trash, having a communal workspace area that renters can go and feel that there's a welcoming sense of community with events. And then let's talk about the money. We're all here to find out about investing in multifamily. So we want cash flowing businesses. We want to stabilize the apartment building and really get a cash on cash return of between at least 10 to 14%. But the real number that I want you to leave this slide with, the takeaway, is what's listed as the annual rate of return, the ARR. We want to really target 15 to 20% on that. And I want you to bear in mind what Anne said earlier about what happens in the stock market with the volatility, generally leading, at least in the short term, much lower rates of return. Finally, what are our investment terms and what happens with refinancing? So our typical hold terms as we buy, renovate, and sell these apartment buildings are typically 3 to 5 years. Sometimes we hold on to them a little bit longer, could be 7 to 10 years, but it's generally 3 to 5. And then you're able to get your return on your investment. And second, there are often opportunities along the way to refinance the loan that we have on the apartment building to be able to return that investment back to our investors even earlier. That being said, let's talk about something important that usually comes up in this section. Not only are we looking for opportunities to refinance, but we're often buying these buildings with an assumable loan so that we can take on a lower interest rate than is currently in the market. And I'm sure you're all thinking about that now.